All right, so today I wanted to talk about stocks in the healthcare sector. Getting right into it, the first one here, West Pharmaceutical Services. This is one that provides parts for, I guess the best way of getting it would just be what they say here. Sells containment and delivery systems for injectable drugs and healthcare products. So um, they're kind of the middleman between the drug manufacturer and actually administering the drug. Um, the one thing I would point out here is that this company is pretty expensive. They got a 34 PE right now. I would wait until that gets below 30, probably even closer to like 20 to 25 before I would pick it up. I mean, year to date, let's see how low they've gotten. They haven't even gotten that cheap this year at all, to be quite honest, and they've came down quite a bit from the start of the year. So this company started out the year like insanely expensive, probably. But if you could get it like, let's say even like 280, they would have to be below that. But this is a very good company. They're just a little expensive right now. Um, as far as other ones go, Abbott Laboratories. This is probably well. This one, it's between this one and one other one. My favorite companies in this sector. Again, 22 PE, so probably fairly priced. I'd like to get it maybe a little bit cheaper. If you could get it around like 100, I think that would be a good deal. But again, this is a company that provides medical devices. Again, very large company, 185 billion, but this is a company that, again, going down the road, there's going to be a massive demand for this kind of stuff, hence why I like the company. And I don't think it's crazy overpriced at this point either. That's kind of the problem with a lot of companies, even with the stock market coming down a little bit recently. A lot of these companies are still very expensive. The last one, West Pharmaceutical, being one of them, but I don't think Abbott is actually overly expensive. I mean, it started out the year at 135, so it's came down like 30% this year. So I think it's actually moderately priced here. Um, Other ones, Agilent Technologies. I'm not sure if that's exactly how you pronounce it. Ticker symbol A. This is probably my other favorite company in the healthcare sector. They provide um, they're more of the diagnostics and research aspect of it, application focus solutions to the life scientists, diagnostics, and applied chemical markets worldwide. So again, they're more of the diagnostics and research side of it. But again, this is another area where, with technology advancing so rapidly, this is going to be a company that's going to benefit definitely. It does have a 30 PE, so it is a little bit expensive right now. I mean, year to date, it's come down as low as about 113. I think if you could get it below like 120, maybe 115, that'd be a great place to pick it up. Again, it started the year at 156, which is so it has came down quite a bit. I don't think it's insanely overpriced right now. But it definitely would be a little nice to pick it up a little bit below where it is right now. But again, over the long run, I think if you take Abbott and you take this company, those are probably the two best companies in the sector over the long run, in my opinion. Um, the last one I'll bring up here is Align Technology, another medical device one. Again, it is actually not crazy expensive considering it's literally came down like 40% this year, actually even a little bit more. So this company's came down a lot in price, but again, if you look basically since May, it's actually been fairly flat. But again, um, and the last thing I would bring up here is, and something that's important is you people would probably ask, okay, well, you haven't brought up AbbVie, Pfizer. What do you got against those companies? I'm not necessarily bearish on those companies, but the problem with those companies is if you look at the concerns in the healthcare space right now from a political perspective, a big issue is drug pricing, right? And that um, this is something that's almost certainly going to get it already is regulated, but it's going to get regulated more and more because um, the AbbVies of the world, the Pfizers of the world, they're not going to be able to raise the cost of their drugs in line with inflation, at least if you ask me. So those are companies that are probably going to see their profit margins get hurt a little bit. But again, are medical device companies going to see their profits get hurt? Maybe, but not to the extent that the drug manufacturers are. Not, the insulins and the prescription drugs. Again, same goes for the diagnostic and research companies, right? Those are things that the prices of those are not going to get cut, and if they do, it's not going to be to the extent of the other ones. So again, I'm not necessarily bearish Pfizer or AbbVie. I think they're solid companies, but I think that the medical device companies, namely Abbott and to a lesser degree this one, are going to outperform them, and they're going to outperform the index at least over the next decade or two. And same goes for Agilent or Allegiant. I'm not sure how you pronounce it, but I think that those are the best. If I had to pick two, like I say, those would be my two. If you were investing today. Um, so again, that is what I wanted to bring up as far as the healthcare sector goes. As far as the stock market itself goes, we've had a little bit of a drawdown. S&P is down to just above 4,100. I believe we got close to 4,300. Nasdaq just below 13,000, 12,897. Um, it's almost certain that we're going to correct back into the 3,000s on the S&P, and probably below 12,000 on the Nasdaq. The question is, do we go below the June lows, right? If I had to guess, I think it's about a 50-50 shot. I think the question is, how soon does the Fed pivot, right? If they pivot as soon or sooner than the market's priced in, okay, well then obviously it's not going to correct lower than that. If we get a black swan or something that's unexpected, and depending on how unexpected, then we're going to go below. If we go below, I don't think we go that much below, because if we do, assuming inflation hasn't trended back up, which is pretty unlikely, the Fed will almost immediately come out and say, yeah, we're going to pivot, or at the very least, we're going to stop raising rates. And once that comes out, it's probably unlikely that the stock market goes any lower. So again, and I think we're going to know that with it by the end of the year. I think we'll know by the end of the year. Next meeting, we're looking at probably 50 basis points. The one after that, we're looking at probably 25. The market's already priced that in. So the real question is, what happens after that? And we will almost certainly know that by the end of the year. My guess is that they probably stop hiking after that. Maybe we get another 25 basis points. But again, I don't see us getting much above what is already priced into the market, because by then inflation is probably down to, I don't know, 5 to 7%. Again, still crazy high. But again, as long as it's not going up and as long as it's trending down, that's all the market really cares about, and that's all the Fed really cares about, right? And by then, the economy probably still is slowing, right? Probably by nothing crazy, probably not super significant. So as long as the economy is slowing a little bit, as long as inflation's ticking down, even if it's slightly, as far as the stock market's concerned, we'll probably be okay. So anyway, that's what I wanted to bring up today. If you liked the video, hit that like and subscribe, and stay tuned for more.